Now, even though I wouldn't consider myself by any means an income-focused investor that's only solving for investment opportunities that are going to generate a ton of income every single month. As you can see throughout my long-term portfolio, there are certain names in here that are more income-focused, but also names in here that are more dividend growth-focused, which is why I would kind of consider myself a hybrid between the two. But in this video specifically, we're going to go through 5 of my favorite, more income-focused, higher-yielding ETFs that are all offering north of a 10% starting yield. Now, the best part about this is that even though every single one of these ETFs are yielding more than 10%, every single one of them have a positive total return, so we are not looking at any dividend junk, high yield traps over here. So if you want to see which 5 higher yielding ETFs I not only hold in my portfolio, but would consider some of my favorites, make sure to drop a like down below, subscribe, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first ETF, one of my favorites that yields north of 10%, as of right now around 12.34%, is SPYI, or the NEOS S&P 500 High Income ETF. Now, this ETF's target benefits and strategy says right here, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. Actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, also, this fund utilizes a call option strategy that may include both selling and purchasing SPX index options, which also may provide upside during rising markets. So even though SPYI is an income-focused ETF, it also seeks some potential upside because of the unique strategy, and on top of that does it in a very tax-efficient way. But even though SPYI yields well north of 10%, which like I said is going to be every single ETF in this video, this ETF also has a positive total return. Since inception, this ETF has around 28.6% total return, or around 13.47% on average every single year. Now, if you were to spend the dividends along the way, let's say, you still have around a 24.9% total return and around 11.8% on average annual total return. So either way, SPYI passes the test as far as total return goes and yields well north of 10%. And even for me, as more of a dividend growth / income focused investor, I'm going to continue to add more and more of this ETF into my portfolio in the up and coming years. Another one of my favorites that do yield north of 10%, not necessarily my favorite, but one of them that I would consider is qyld, or the Nasdaq 100 Covered Call ETF. Now, I know qyld over time has really decayed and a lot of investors have hated on it because of this, but over the last year or two now, qyld seems to be sort of stabilizing and the performance has been much better. Not to mention, for the context of this video, qyld does have a trailing 12-month yield of around 12.19%. So even though it's not my favorite, let's listen in. Reasons to consider it: it says high income potential, it seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. qyld has been paying distributions for 10 years running, and it writes options on the Nasdaq 100 index, saving investors the time and potential expense of doing so. Now, by no means get it twisted, qyld is not my favorite covered call style ETF. It's not my favorite 10% plus yielding ETF, but it is an ETF that I've held for several years now. And honestly, it hasn't been the worst investment of all time. We're talking around a 7.25% on average return with dividends reinvested, or around 4.7% with them out. Now, again, I repeat, not the best, not my favorite, but it is north of 10% yield, and it does offer a lot of income potential for investors. Another one of my favorites that yield well north of 10%, and one that I've been buying a lot of as of recently, is SVOL, or the Simplified Volatility Premium ETF, which has a very unique strategy. It says the Simplified Volatility ETF, or SVOL, seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse performance of the VIX index. So basically, because SVOL shorts the VIX, at least with a portion of the fund, it's going to do very well when volatility is very low, which happens to be a majority of the time. Now, SVOL pays a massive yield, around 16%, so of course it not only passes the 10% plus rule for the context of this video, but SVOL has paid massive distributions over the past several years. And these distributions have turned to massive gains for investors. If we're looking at dividends being reinvested along the way, we're talking around a 41.3% return over 3.2 years, or around 11% on average. And if you were to spend the dividends along the way on things like bills, vacations, whatever the case might be, we're still talking 8.6% on average per year, which is not bad whatsoever when you're getting exposure to an ETF that's yielding north of 16%. Another one of my favorite newer ones that yield well north of 16% is FEPI, the Rex Fang Innovation Equity Premium Income ETF. This is a super interesting ETF that gives you exposure to some of the big tech names, but also with covered calls written on them. It's going to not only help with some potential downside, but also offer a massive amount of income because of the volatility and premiums that are on these big tech names. Now, the objective for FEPI is basically that they buy big tech names, write cover calls, and then by doing so, they offer enhanced income potential for investors. And by doing so, the craziest thing of all is FEPI's offering around a 25% yield as far as distribution goes, and this is as of recently. Again, this can of course go up or down depending on what happens in the markets, but as long as big tech is trading sideways and or up a little bit with these covered calls, I think FEPI is going to thrive, which is why I've been adding a few shares of FEPI to my portfolio as of recently. But what's also crazy is that even with that massive yield, FEPI, at least so far, since almost last year now, has had a nice positive total return. We're talking almost 18% total return, or around 20% annualized gain, or if dividends were not being reinvested, around 17% and 19%. So either way, FEPI has sort of passed the test, at least as of the last year. Again, a lot can happen in the future, but so far, FEPI seems to be a winner if you are, of course, looking for well north of 10% yield. Now, the last ETF that yields well north of 10%, around 20% to be exact, in a new position in my long-term portfolio, this one seems pretty decent so far. We're talking about SPYT, or the Defiance S&P 500 Income Target ETF. Now, it says right here, aim to achieve a target annual income of 20% in the S&P 500 using options, and it's paid out monthly. The strategy says it's an actively managed exchange-traded fund dedicated to generating current income. Our strategy revolves around holding shares of the ETF that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. And again, just like a lot of these newer ETFs out there, I have to say, take all this performance, at least so far, with a grain of salt, because again, these are all relatively new. But at least so far, this ETF, SPYT, has paid anywhere from 33 cents, more or less, up to around 34 cents at times, which again is around a 20% yield, which is exactly what this ETF is going to target. Now, even if SPYT trades more or less sideways, if it offers investors around a 20% distribution, I can't speak for everyone, but that sounds absolutely amazing to me. But does SPYT pass the total return test? This is the biggest test I like to use as far as some of these higher yielders go, because again, just because something offers a massive yield, if it offers a negative total return, what's really the point in investing into it in the first place? But SPYT not only passes, but it passes by a lot. Over the last half year, we're talking around a 17.7% as far as annualized gain with dividends reinvested, or around a 16.7% annualized gain without, or around 8% total return so far, around 7% total return with dividends not being reinvested. So either way how you cut it, SPYT has paid massive distributions to investors, at least so far over the past half year, and I say that sort of laughingly because again, a lot can change in the future. These newer ETFs have not necessarily been stress tested yet, so keep this all in mind. So there we have it, guys. Those are 5 of my personal favorite higher yielding ETFs that all yield well north of 10%, some more than others of course, and that all offer a positive total return, at least historically. Now, like I said, by no means am I an income-focused investor looking to buy into the highest yielding ETFs or stocks, use that income for my bills as of right now and or to reinvest, but throughout my portfolio and of course my personal objective when it comes to investing, I do want to buy into different stocks or ETFs that are going to offer a substantial amount of dividend income, at least with a portion of my cash balance throughout my portfolio. So I hope that some of these ETFs I share with you maybe unlock some ideas for your portfolio. But now, most importantly, I want to hear from you guys down below. If I were to ask you what is the #1 single ETF that yields north of 10% that is your favorite, drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.